Welcome to the Deep Dive. Today, we're really getting into something fascinating. We're exploring one of those powerful forces in global finance that often stays, well, behind the scenes, the family office service market. Ever wondered how the super wealthy manage those huge fortunes, make sure their legacies last? Well, this deep dive is definitely for you. Our mission, basically to give you the inside track, make you well informed on this really dynamic, fast-growing sector.
It really is remarkable, isn't it, how central family offices have become, I mean, globally. They're not just managing money anymore. They've really evolved. They're like foundational pillars now for sustaining dynastic wealth. And we're talking comprehensive services here. It's everything. Complex investments, sure, but also philanthropy, succession planning, all of it. Their importance is just, well, it's growing.
Yeah,
Fast.
exactly. And, all the really cool insights we're going to share today, they come straight from a new, pretty detailed market analysis by Cognitive Market Research.
Yeah.
So yeah, let's dive in. Some of these initial numbers are genuinely eye-opening. They really set the scene. Okay, first off, the global picture. This market has seen just, well, explosive growth. Think about this. Back in 2021, it was around, what, $9.3 trillion.
Roughly, yeah.
By last year, 2023, a sub-estimate is already $13 trillion. But here's the kicker. It's projected to almost double again by 2033. We're talking like $25.4 trillion.
Wow.
Yeah, that's a compound annual growth rate, a CAGR of 8.7%, which is pretty substantial year over year.
And an 8.7% AGR globally, that tells you something important. This isn't just steady growth, it's accelerating. And like you said, it's not happening in isolation. There's some big global trends pushing this. You've got, well, increasing wealth concentration, more people with really vast, complex fortunes. That's one thing. Then there's this huge wave of generational wealth transfer happening. Trillions changing hands, right?
Yeah.
And that demands more sophisticated planning than ever. Plus, there's just this growing need for really personalized services, both financial and non-financial, the kind traditional banks often struggle to provide at that level. When you look at those trends, what really jumps out at you? How they're reshaping things?
What jumps out at me is, well, it really highlights how complex managing wealth has become. It's global, it spans generations. These specialized structures, family offices, they feel less like a luxury now and more like a necessity, for keeping that wealth intact and growing. It's managing whole family ecosystems, really.
That's a good way to put it, ecosystems.
And that leads us nicely into looking at the regions. Let's start with North America, still a dominant force. It's set to grow from about $2.8 trillion in 2021 to $11.2 trillion by 2033. That's maintaining a solid CAGR over 8%. The U.S. obviously has the biggest slice, but Canada's growth is really interesting, forecasted at nearly 9.75% CAGR.
That's quite high.
Yeah, it means their market could almost triple, hitting maybe $1.37 trillion by 2033. Mexico's doing solidly, too, just over 7.3% CAGR, still strong growth.
And North America's strengths, well, it comes down to a couple things. That long-established wealth base, for one, plus you have a really sophisticated, innovative financial market there. The demand for these kinds of integrated services has been around for decades.
Yeah.
And the infrastructure, regulatory, technological, it's all very robust. That really supports it.
Makes sense.
Which kind of explains why you see places like Canada accelerating now. They're building on that strong foundation.
Right. That established base makes a difference. Okay, let's hop over to Europe. Historically, a real stronghold for wealth management. Their market's projected to grow from just under $3 trillion in 2021 to, get this, $8.16 trillion by 2033. The CAGR there is actually a bit higher, 8.84%. Yeah. And you see big contributions from the usual players. The UK, projected to hit nearly $1 trillion by 2033. Germany, France, also major players looking at over $1.5 trillion and $1.2 trillion respectively by 2033. But it's not just them. Italy, Spain showing strong growth. And Russia, interestingly, has a CAGR near 10%.
Close to 10%.
Quite dynamic across the continent, really.
Europe is fascinating because it's such a mix. You've got that centuries-old dynastic wealth alongside really rapid new wealth creation. So many family offices there have these long histories, sometimes stretching over multiple generations, and often that involve, well, complex family structures, different nationalities within the same family, diverse investments across countries. It gets complicated.
I can imagine.
This kind of unique blend creates a really intricate set of needs, managing old estates, navigating cross-border stuff, multi-jurisdiction taxes.
So it demands that bespoke service.
Exactly. That high-touch, tailored approach that family offices are really good at.
You mentioned mentioned intricate family structures. Can you give maybe like an example? What kind of complexity are we talking about?
Sure. Well, imagine one family. Maybe one branch is in traditional manufacturing, another is deep into, say, biotech. And the heirs, they might be scattered across London, Zurich, maybe Singapore, each place with its own laws, its own tax rules.
Okay, yeah.
A family office there needs to handle completely different types of assets, keep everything compliant everywhere, and help family members with potentially very different views actually communicate and make decisions together. It's way beyond just managing the money. It's governance, communication, keeping the family aligned.
Wow, okay, that paints a much clearer picture of just how deep these services go. Now, switching gears a bit, if we're talking huge potential, really high-flying growth, we have to look at Asia Pacific.
Yeah.
That market is really taking off.
Definitely one to watch.
Projected to go from about $2.3 trillion in 2021 up to nearly $6.3 trillion by 2033.
Wow.
That's an 8.75% CAGR overall. China, India, Japan are the big players there, obviously. But India, wow.
India's growth is remarkable.
It really is. It has the highest CAGR in the whole region, an incredible 10.57%. It's surging from just over $365 billion in 2021 to potentially over $1.2 trillion by 2033.
That's phenomenal growth.
Absolutely. And Australia and Singapore aren't far behind either, both growing around the 9% mark.
Yeah, and the story in APAC is largely about new wealth. A lot of it. It's coming from entrepreneurs, rapid economic growth, those booming tech sectors you see across the region. And unlike maybe some older wealth centers, a lot of this is first-generation wealth.
Oh, okay.
So these families often need to build sophisticated wealth management structures, basically from scratch. That creates this rapidly rising demand for the kind of professional, structured approach family offices offer. New money looking for solid, established solutions.
That makes perfect sense. Okay, let's wrap up the regional picture with this final group. South America, the Middle East, and Africa. Kind of diverse, but all showing dynamic growth. Emerging frontiers, really. South America, for example, showing a strong 9.55% CAGR overall, looking to reach almost $1.85 trillion by 2033. And listen to this. Argentina and Colombia, both clocking in double-digit TGRs. Over 10% each.
Very strong indeed.
Then the Middle East, also robust expansion, 9.71% CAGR overall, projected to hit nearly $1 trillion by 2033. And the UAE is really the standout there. It's got the highest CAGR in this whole group, actually over 10.7%.
Leading the charge.
Definitely. And finally, Africa. Steady, consistent growth, 8.13% CAGR, forecasted to reach over $915 billion by 2033. Nigeria and South Africa are leading the way there.
Looking at these three regions together really highlights how global this family office trend is. It's everywhere. And in these, diverse emerging markets, the drivers can be quite different. You might have resource-based wealth in parts of the Middle East and Africa, or maybe booming agriculture or tech in South America. But the common thread, growing wealth that needs sophisticated management, often across borders. Which raises an interesting point, doesn't it? Given the unique economic situations, the different regulations in these areas, how might the kind of services family offices provide there differ from what you see in, say, North America or Europe?
That's a really good question to think about, yeah. The source data doesn't break down the specific types of services region by region in that much detail, but what's clear is these markets are rapidly adopting more professional ways to manage wealth. It's a major shift. So bringing it all together, what's the big takeaway? What does this mean for you listening and for the global economy?
Well, the main theme seems crystal clear, this huge global market surge. It's driven by wealth getting more complex, the need to diversify, careful succession planning, and those intricate global investment needs.
Absolutely.
The outlook just stays incredibly bullish, driven by more wealth overall, yes, but also by clients demanding more sophisticated help everywhere. Right. And it does make you think beyond just the numbers, this rise of family offices. It signals something bigger, doesn't it? These huge figures, these trends, they reflect some pretty fundamental shifts in the economy, maybe even society. It's really about the intricate art of stewarding wealth, not just for a few years, but potentially for generations. And that covers everything, right? Financial assets, sure, but also family values, philanthropic goals. It really points to a profound change in how massive fortunes are being preserved, grown, and ultimately how they impact the world.
And that wraps up our deep dive. We've journeyed through the family office service market, hopefully giving you a clearer, sort of more nuanced view of this really powerful, often unseen part of global finance.
Yeah, and as all this global wealth keeps growing, keeps transferring between generations, maybe here's something to ponder. Beyond just managing the money, how might family offices evolve even further? Could they play an even bigger role in shaping philanthropy, maybe driving innovation, influencing society more broadly in the coming decades? It's definitely a space to watch.
That's a great final thought. Really makes you think. Thank you so much for joining us on this deep dive. And remember, our insights today came from that detailed market analysis by Cognitive Market Research. We'll catch you on the next one.
Okay, let's unpack this. Today, we're diving into a truly fascinating, maybe somewhat behind the velvet rope corner of the financial world, the family office service market. We've pulled together, well, a pretty rich stack of insights from recent market research. And our mission, as always, is to give you a shortcut to being well-informed about these, bespoke financial strategies for the ultra-wealthy. Ever found yourself wondering how the world's wealthiest families manage their multi-generational fortunes, their taxes, their legacies, even their incredibly complex lifestyles? It's far more intricate and, frankly, more interesting than you might imagine.
Oh, it absolutely is. It's an intriguing area, definitely. A world where personal wealth management doesn't just scale up, it transforms into something else entirely, almost like a mini institution.
Mini institution.
Oh,
That's a powerful way to put it. Now, what's genuinely fascinating here is what's actually driving the significant expansion of this market right now. It feels like we're hearing more and more about family offices, but why? Why the sudden prominence?
well, okay. The undeniable force is the sheer surge in global wealth and, the increasing number of high net worth individuals, HNWIs. But I think the unseen driver here is a fundamental shift in the nature of wealth itself. It's becoming less about just piling up assets and more about crafting a multi-generational legacy, right?
Why?
And that demands this sophisticated, almost, as you said, institutional level infrastructure for management. It isn't just growth. It's more like an architectural evolution of how wealth is handled. So these ultra wealthy families, they're actively seeking highly tailored solutions, stuff that goes way beyond traditional asset management.
Like what specifically?
Well, we're talking about intricate estate planning, sophisticated tax optimization strategies, complex philanthropic efforts that really reflect a family's values. And this escalating demand is really paving the way for both single-family offices, SFOs, and multifamily offices, MFOs, to flourish globally.
So it's not just about getting richer, but the complexity that comes with it and this long-term vision. Can you elaborate a bit on that? What makes managing multi-generational wealth so much more intricate than, say, a big corporate fund or even just a first-generation fortune?
That word complexity is absolutely key, yeah. And it leads directly to the increasing need for centralized wealth management. Think of family offices as these sort of holistic ecosystems.
Okay.
They basically consolidate everything: investment decisions, legal affairs, tax strategy, even lifestyle management, seriously, all under one roof.
Wow.
And for affluent families, this kind of unified structure provides incredible stability, governance, and crucially, continuity, especially when you're looking across many generations, making sure the wealth serves the family's purpose as it evolves.
That clarifies things. It sounds like a dedicated, almost bespoke operations center for a whole family's financial universe. But in a world that's changing so fast, how nimble can a structure like that really be? Are there risks to consolidating everything?
Well, that universe often spans the globe, right? Which brings us to another major factor: the inherent complexity of cross-border wealth structures. You've got many globally mobile families holding incredibly diversified portfolios across various jurisdictions.
There are different rules everywhere.
Exactly. So compliance, taxation, asset protection, it all gets incredibly complex. So family offices with real international expertise, they don't just offer support, they become indispensable. They're essential for navigating global regulations, mitigating financial risk, almost like a private embassy for the family's
A
asset.
private embassy. I like that. Okay, so it's clear that as wealth grows and gets more complex, the infrastructure to manage it has to grow and get more complex too.
Yeah.
So what does this all mean for you listening in, trying to understand this, intricate world of global wealth? It seems it's not just about what's being managed, but how it's managed and the incredible detail involved. But like any booming market, there must be challenges, right? Critical restraints, hurdles. What are they seeing?
Oh, definitely. One significant barrier is, quite simply, the cost. The high cost of setting up and running a family office. These full-service models, they demand dedicated teams. Legal pros, tax experts, investment specialists.
Right. Not cheap.
Not cheap at all, which kind of by definition makes them accessible only to the ultra-wealthy. But what's sort of fascinating there is how this barrier almost creates a positive feedback loop for the existing family offices.
How so?
Well, it limits competition, right? And it entrenches their bespoke value proposition. It almost guarantees premium pricing. It's like a luxury good where the price reinforces its exclusivity and, perceived necessity.
That's a great point. So it functions like a luxury good,
Yeah.
accessible only to a very select few. Does that inherently limit its broader impact, maybe? Or are there trickle-down effects we're not seeing?
It certainly is a luxury service, yeah. And linked directly to that, there's a persistent shortage of specialized talent. Finding experts with deep knowledge across the state law, various international tax codes, complex investment strategies, and sensitive family governance. It's a real challenge.
And this talent gap, it can absolutely affect service quality. And more broadly, it limits the scalability of the whole market. It's not just about having the money, you need the right people.
That's a really interesting point, the human element being a bottleneck. It seems like mastering those delicate family dynamics is almost as crucial as the financial acumen itself. Is that maybe where we're seeing some innovation for the future, too?
Absolutely. That human element is so key. And it connects directly to some of the really significant trends that are reshaping this market. For instance, managing wealth across generations often brings in, emotional dynamics, family disputes.
Sure.
And without a clearly defined framework for governance, wealth preservation can become incredibly strained. So family offices have to navigate this really delicate balance. They're combining professional decision-making with these very sensitive family dynamics. It adds this unique layer of complexity to everything they do. That raises an important question then. How do they practically navigate that? These deeply personal, often sensitive issues alongside the hard financial calls. It sounds incredibly difficult. It's not just about the numbers, clearly, but about people and their legacies. Okay, now let's talk about the future. What's fascinating here is how this market is evolving. It seems driven by some really significant trends.
Yeah, looking ahead, if we connect this to the bigger picture, one of the biggest shifts we're seeing is the rise of impact investing and ESG integration, environmental, social governance.
Right? ESG. We hear a lot about that.
Exactly. Families today aren't just looking for returns. They want their capital to reflect their values, to make a positive difference somehow. So whether it's through, say, sustainable real estate or clean energy projects or social impact bonds, family offices are increasingly aligning portfolios with purpose. And crucially, doing it without sacrificing performance. That's the goal anyway.
That's a huge shift, isn't it? Blending profit and purpose like that. And earlier you mentioned lifestyle management being under one roof too. So are we talking about finding the best private chef? Or is it more like, I don't know, ensuring the family yacht is compliant with maritime laws in 5 different countries?
Well, it can genuinely be both. I once heard a story, maybe it's just a story, who knows, of a family office coordinating a child's surprise birthday party across 3 continents, managing travel, gifts, logistics.
Seriously?
Yeah, while simultaneously advising on a multi-million-dollar real estate deal. That's the level of integrated detail we're sometimes talking about.
Wow.
And underpinning a lot of this operational shift is digital transformation. We're seeing a significant move towards things like real-time portfolio dashboards, automated compliance systems, advanced cybersecurity protocols.
Makes sense.
Digital platforms are really redefining transparency and risk management for modern family offices, making sure everything runs smoothly and securely, which is crucial given the complexity and the sheer value of the assets involved.
So technology is making these complex operations more efficient, more secure,
Right.
but also maybe enabling that incredible personalization we were just talking about.
Precisely, yeah. And finally, another big trend is the rapid growth in multifamily office models, MFOs. We touched on them briefly earlier.
Right, the shared ones.
Exactly. These shared platforms, they offer access to elite financial services, things like institutional-grade investment management, sophisticated estate planning, but at a fraction of the cost of a dedicated single-family office.
Okay, so that opens the door a bit wider.
It does. MFOs are making the benefits of a private family office more accessible to affluent families who might not have the, hundreds of millions or billions needed for their own SFO. It democratizes it to an extent. It broadens the reach of this kind of service.
So putting it all together, what does this all mean? The family office service market isn't just growing bigger. It seems like it's undergoing a pretty significant transformation, becoming more value-driven, more tech-savvy, and even a bit more accessible, maybe to a broader, though still very affluent group.
Yeah, that's a good summary. To sum it up, the market for family office services isn't just growing, it's definitely evolving. And at a rapid pace, you've got rising global wealth, increasing financial complexity, and this greater demand for transparency and bespoke solutions. So, family offices are becoming these really vital guardians of intergenerational prosperity. They're kind of reshaping the very definition of wealth management as we go.
So, thinking about all this, what stands out to you, the listener? Consider how these really sophisticated structures, through things like impact investing and their sheer cross-border reach, don't just manage private wealth, but they potentially shape global markets, sustainability efforts, maybe even philanthropic landscapes in ways we might not fully realize. It definitely makes you wonder, who are the true architects of tomorrow's world? Something to think about.